That brings us to our next segment, the importance of raising your zero. What if your zero wasn't zero anymore? What if 1,000 in your account felt like rock bottom? Not because you're broke, but because your standards have been raised. In this segment, we're talking financial discipline, mindset shifts, and what it means to elevate your baseline for success. Let's dive in. I love this topic
Hmm.
because this is something that I implemented and didn't know that there was a term for this
Me too.
from
Me too.
raising your zero,
Me too.
because I actually like I just read, like my zero now is $1,000. Like if I don't have $1,000 in my account, I'm like, that's zero. Like that's my zero. Like I can't go below that. It has to stay. That has to stay there at all times
Hmm.
for things to be coming in and out. You don't want no overdraft fees, you don't want no late fees and stuff like so. If I just keep 1,000 in my account at all times, I'm good. But the flip side of that, I had to realize that if I have $900 in my account and someone asks me, can they borrow $20? I had to realize that it's okay to say I don't have it,
Yeah.
because I don't, because my baseline is a
Your standard.
thousand. Yeah, that's all that matter
Yeah.
when it comes to my
Facts.
paper. Like my standard is like, and I had to get, because a lot of times I would dip into that
Hmm.
and feel as though that I had the money to give or whatever the case may be. And that was something that my mom always instilled in me, like you need your money,
Have your boundaries.
yeah, have your
Respect
boundary.
yourself.
Yes,
Discipline.
discipline. Right,
Financial discipline.
exactly.
So before we get deeper into the topic, let's go ahead and go roll that first video, and we'll be right back at you.
I read a stat back then and it said 70% of people don't have $1,000 in savings. They don't have $1,000 for a rainy day. Then I saw another stat that said an extra $500 a month can keep most families out of bankruptcy. Then I saw another stat that said most divorces are caused because of finances. And I said, whoa, I think I want more. If you have $1,000 for a rainy day, you're doing better financially than 70% of the world. I said I want to have that. So I had to what I call raise my zero. When I was broke, that meant I have $0. I have no money. I'm looking at my account. I don't have any money. When I finally decided that I wanted more, I said, man, I gotta save $1,000. What I started to do was budget. I was working at the Cheesecake Factory, so I have tips, and I had these 3 envelopes. One envelope, I would save 10%, but this first envelope was really important because I had a goal of I wanted to save $1,000. At this point, I didn't have anything at all. I would spend everything that I had. So this envelope started to grow. It was the coolest thing. I remember the envelope going from the first time I put $10 in to it having 100 to having $400. And I'm like, yo, this is incredible. And then I got to 600, then I got to $1,000. And I remember saying, wow, I am better than 70% of people. Maybe not better, but that's how I felt at the time. This $1,000 became so important to me. The $1,000 became my zero. So if I ever had a $1,100 and I had a blowout of a tire, and the tire cost $200, I got to take $200 from this envelope, this $1,100. Then I got to $900, and I felt broke because my new zero is 1,000. My zero used to be zero. If I didn't have anything, I didn't have anything. If my mom asked me for some money, said, "Hey, can I borrow $20?" If I didn't have $20, I'd say I don't have $20. But now my new zero is 1,000. So I might have $950 in my savings. But if my mom asked me for $100, I would tell her truthfully, I don't have it. I'm broke because my new zero is 1,000. But I always remember, if I ever had to take away from this $1,000 because it's an emergency, I have to pay it back. So this is my journey of saying, I just want to have more than nothing.
He couldn't have said it more clear than I did.
Now let's break that down.
Let's do that.
First and foremost, it starts with mindset. You
Correct.
gotta be in the right state of mind, and by the right state of mind, how you do things. I saw something before I came over today. It said it was Jim Rohn. He was talking about success isn't what happens to you. Well, success isn't based on what happens to you. Success is based on what you do. So when it comes to finances, success in when it comes to finance, ain't about, like, oh, like I have this job, or I didn't get this promotion, or I had this bill spring up on me.
Mm-hmm.
That's not what it's about. Financial success is about, okay, well, I consciously make a decision to set my zero at $1,000. So no matter what happens, no matter who needs it, no matter what I want, if I got $999 in my account, or my primary account, I'm broke.
Right.
Like, I'm broke.
Right. Dead ass.
Dead ass broke.
Yeah.
But it's like a mind game you have to play for yourself, and you set the board up in your mind. And so once you set the board up to, your zero was 1,000, now you're able to now operate from a perspective of, now when you see $1,000, you don't see $1,000. So if you got $1,500 in your bank account, it's not 1,500, it's just 500.
No, it's not.
And
No, it's not.
it's really like, I got $500.
Yeah.
And it's like that thousand just sits there, in a sense, as a cushion, or as for emergencies or whatever could happen, because again, life will happen.
Yeah.
You know what I mean? You will have emergencies.
And you could take baby steps to this method, to
I mean,
this
the envelope
discipline.
method, like you said,
You could even
10%.
do 10%, or you could raise your zero to $100.
Mm-hmm.
And once you get to, anything under 100, you like, yo, I'm broke. Then you could have 500. It could be whatever, 1,000, or you could, if you got money, you get like 50,000. Once it go below 50,000, I'm broke, or whatever the case may be. But there's levels to it, and it's it's subject to how you want to do it, what works best for you, where you are with your money, and what your goals are.
Mm-hmm.
So I like the 10% method. I tell all my
The Richest Man in Babylon.
well,
That's where that comes. Well, that's one of the main financial literacy books. Once you start studying financial literacy, that's like one of the core pillars, is reading that book. And it's basically, the whole point of the book is, every time you make $1, you take 10% of that and you keep it, and you
yeah,
invest it. And that's where you start. That's the foundation. You
yeah,
start at 10%, ideally with the goal of raising it to 20. In my mind, I want to, my ideal dream of dream goals would be to be able to invest 90% of my income,
yeah, and live off the 10.
live off the 10.
Yeah, that would be ideal.
That would be ideal for me. And once I get to that point, like, that'll be in my mind like nirvana, because that will be a representation that, I have created enough value in the world to be able to do that.
Yeah,
And that 10%, though, is still going to be whatever it's going to be. It's going to be enough to take care of me and mine, but the
and
majority of that's getting invested.
and you'll thank yourself for this, because life will start lifing.
Mm-hmm.
Things will happen. There's the sun doesn't shine every day of the year. There are rainy days, there are storms. And so, with that being said, there's going to come a time where, something goes wrong with your car. And
Facts.
there's going to come a time where there's an accident, where somebody might hit your car that you had parked, perfectly parked. And, there's going to come a time where, there's
Life
the
happens.
the
Life
war
will life.
the water pipe busts in your house or something, and life things happen. So it's better going through life always having a cushion or egg for emergencies, because emergencies will come. But and then a lot of times those emergencies, if you're not prepared for them, they really can set us back, and then we're playing catch up, and then we're robbing Peter to pay Paul. Then we taking money from creditors and borrowing money, and which is continually putting us further and further back.
Mm-hmm.
So it's a great practice to have implemented in your everyday finances, because it only benefits you, because trust me, shit is going to happen.
So, for example, when I look at the the implications, the long term implications of raising your zero, as time goes on, you'll eventually mentally get to the point where it becomes a game, because
Hmm.
that's kind of where I'm at right now.
Hmm.
So versus 1,000. Then it's 2,000. Then it's
Mhm.
3,000. Then it's 4,000.
Mhm.
And it's to the point where you become obsessed with it.
Mhm.
Now, how is that going to show up in real life though? To the people who are used to you being a quote unquote spender, they're going to start saying that you've changed because you're most likely not going to be going out as much. You're not going to be spending money on the things that you typically would have spent money on because now you're trying
Facts.
to keep the money.
Facts.
And they're gonna, people are gonna say that you're broke or that you're being cheap or you're not generous or things of that nature. But the reality is, again, you know what game you playing, you know what outcome you striving to get to, and if you raising your zero constantly, then that's what it is, regardless of how other people feel about it, because they're going back to paradigms. They're moving off of a different paradigm. So I got another way of explaining paradigms.
Okay, let's go for it.
This is perfect. So I've been doing research in the billionaire belief, and so go check it out. I got a new video out right now, the three core billionaire beliefs. But when I was doing research for that video, one of the things I learned was going back to vision. So we got the old economy now, and we got the new economy.
Mhm.
So the old economy was where the baby boomers thrive for the most part. Silent generations kind of introduced it, but it's where the baby boomers thrive. Is where the Generation X had to ride the coattails.
Mhm.
But us millennials, us Gen Z, Gen Alpha, Gen Beta, we're now ushering in a new economy. We as
Mhm.
millennials are now what the silent generation was, to the old economy,
Mhm.
quote unquote. So we got old economy, new economy. So to as a metaphor to represent these two economies, we'll use the old economy being, a physical map, and then the new economy being GPS.
Okay.
So nowadays, what I'm seeing is the quote unquote the tension between the generations, or between the old economy and new economy, is now you got the baby boomers who are operating off of a map, a print map, trying to tell the newer generations, or the people of the new economy, like what direction to go in.
Mhm.
But the newer generation is just like, nah, like the path you telling me to go in, it don't exist no more.
Mhm.
I'm going off this GPS, and GPS says it don't exist no more, because unlike your print map, which is stagnant, it's static. It is, once it's printed, that's all that's it's a last quote unquote update.
Yep.
But from the time it's printed to now, 50 years later, you know what I'm saying, a lot has
Things
changed.
have changed.
And so we now need real time updates. We need directions in real time now,
Mhm.
and we have that with a GPS. So the real time directions say, I don't have to go to college.
Mhm.
If I just master a skill, and I just be consistent, and put my effort into making it happen, then I can create a sustainable lifestyle for myself. I can earn a living, a lifestyle. I can create a business for myself.
Mhm.
That's one example. But then you got the old generation say, no, you got to go to college. You got to get your education. You got to get it, because you're going to need a good job. You're going to need to be able to take care of yourself. You want to be successful, right?
Uh huh.
But again, that success is based upon the print map. It's
Right.
not based on the GPS.
Right.
So moving forward, when it comes down to finances, things like raising your zero, I'm pretty sure it's a concept that's been around for a long time,
Mhm.
but it's still, in a sense, not the print map version of life, or the paradigm that we're given, or the American dream, in a sense.
Mhm.
That's the map we're given. That's the print map, I should say. Go to
Mhm.
school. But that map, it ain't been updated since the Industrial Revolution.
Mhm.
You feel me? Now we got GPS, we got the internet, quote unquote, so we
Mhm.
can learn in real time.
Yeah.
You know what I'm
I
saying?
was just watching this video. It's kind of off the topic, but pertaining to what you're saying about the GPS and the map standard or the conflict. It was this video when a younger guy was talking to his, I think it was uncle or an older guy,
Hmm.
and the young guy was like, I'm scared of becoming like your generation. Talking to the older guy, and so the older guy was like, "Are you really fearful?" He was like, "Yeah, I'm fearful. Like working a job, going to school for 12 years, coming out getting a mediocre job and that you don't like, and you complaining about it. You always tired. You never got enough money. Like we don't want that. Like whatever the case may be." So the older guy said, "Well, why don't you listen? If you listen, we can guide you so you don't have to be like that." He was like, "No, like you can't." You
Mm-hmm.
can't guide us because you're telling us to listen to this map.
Just print map.
And you talking about, and on your map you got the 405, but since that map was made, there's 6 to 7 more exits that verge off the 405 that
Yeah.
get you to your
Facts.
destination
Facts.
faster. And and so that's the mindset the younger generation is working from.
Mm-hmm.
So let's try to like kind of understand them and not be so combative.
Oh, I understand them.
Oh yeah, nah, I'm not talking about you.
I
I'm
know.
talking
I'm
about
just saying, right? Like,
yeah.
but it's just like, yeah, I understand them because when it comes again, raising your zero is a new is will be. It's not a new concept, but it will be something somebody that is operating off GPS is doing,
I would agree.
as opposed to that print map, because that, like, again, that print map is based upon, again, consumption. It came out in the 40s or 50s. You know what I'm
Yeah, and,
saying?
and it is what it is. If I'm broke, it's broke. Zero is zero. But if you're trying to go places, you got to raise that zero, so you can afford the life challenges that come to you, absorb those, and get to your destination, whether it's a financial destination or a physical destination.
But even when we quote unquote pull out pause from this concept to look at just the biggest picture of life, as you just said, the map, the print map, and GPS still applies because the universal paradigm of life is that print map. Back in the 40s and 50s, this is what it meant to be successful. This is the
Hmm.
path you have to take. And if you don't do this, then you're going to not be successful or you're going to be exiled from the community, blase, blase.
Pretty much.
Uh, Now, but again, as we will quote unquote evolve, now we got this thing called GPS, aka the internet, and the
Hmm.
internet allows us to look at what the map is. It's again, it's constantly adjusting because
Yeah.
there's things happening on a moment to moment
Yeah.
perspective,
Real
mile to mile. The last mile was like the last mile. You know what I'm
real
saying?
time. Right.
Real time. You know what I'm saying? We need real time directions now. We can't rely off of just plotting out some course based upon a map that ain't, like, to your point, it ain't even got the updated version of the 405 freeway on it.
Right.
You feel me? But again, that's life, and that's what's happening on a day-to-day basis from generation to
Hmm.
generation. And so you're gonna have, the people who are operating on the map call the people using the GPS, we'll just say, are the radical thinkers.
Hmm.
But again, it's because of the radical thinkers that we have things like GPS.
That's why you
So
have everything.
at the end of the day, when it comes to raising your zero, going back to now, the financial component of it, it's just like you got to realize that within your world, within your economy, you know what I'm saying, you the president of that, you the CEO of that. So, what's your policy? What's your plan? And if you make a decision that I could have $999 in my account, and if my girlfriend wants to go out to eat and I tell her no, I'm broke, and that's what it is. I don't care if you can see $1,000 in my bank account.
And I think your zero should be confidential to you. Like your zero shouldn't be, something that you like in that instance when you're talking to your mate or significant other and they want to do something, he's like, I'm broke. Because when you say you broke
Hmm.
and you don't have when you say you don't have it, it should be left there. If someone knows that you always have 2,500 in your account, especially when you dating a female, like she's gonna try to get what she want. Like, well, you ain't really broke. You got it. So
Hmm.
I think it might work in our advantage if the zero that you set for your finances is something that you keep to yourself and that you adhere to without telling, your wife or your children and stuff like that because they're gonna try to get it out to you.
Hmm.
You're gonna bad enough. You're gonna have enough discipline for yourself not to touch the money. But the other people asking you for it, they don't even want no discipline to not ask you for no money. So they gonna try to like, oh, I know you got it. I know you got it. I know you got it, uncle. I know you got a dad. I know you got a mom. I know. I seen your account. You got it. Yada yada yada. Like, don't even let nobody know what your zero is. Let your zero be your zero. And when you say you don't got it, you don't got it. Period.
That's actually an interesting take. In my opinion, I think it would be best to let them know for the simple fact of that's how you instill the financial literacy in them. That's how you teach it.
Well, we're teaching them one way, but for you, you don't need to know what my personal zero is.
Well, if I have a mate,
You just need
if
to
I'm by
know.
myself, I would agree. Like, yeah, like I'm single. But if I do have a mate, then again, like alignment. Like we do need to be in alignment on our zero, because
Because she'll
again,
have a
it is
zero
our,
too.
but it's our house. Well, that's what I'm saying. Like I don't understand the point of quote unquote being in any form of exclusive relationship with any woman personally, where we're not on the same page when it comes to that type of stuff.
I agree.
Like personally, like it's just I've never understood like why would you form a union to then still operate as single entities.
Yeah, I agree 100%.
You know
Like,
what I'm
like
saying?
if
Like
you
I never
marry and you're
understood
in a
that.
relationship, like, yeah, you definitely communicating. Y'all on the same page. But
It's like we business partners for
there's a lot
life.
more other people that's in that try to get your money other than just the person that
Now,
you.
so for example, now as if let's just say hypothetically speaking, it's me and my mate, me and her. Now, our zero as far as me and her is concerned, like yeah, we both need to know that. So if it's $1,000, it's $1,000. So if my uncle Larry or her auntie Stacy come in and ask us, oh, I know you got it. It's just like she knows already, like nah, no, or I know already, like no, because it's like I said, I already see we at 990 right now, baby.
Mm-hmm.
You know what I'm saying? So the answer is no.
Mm-hmm.
Period. As opposed to just, in my opinion, like that's where the tension comes, or the financial, strife comes, because again, the man is doing something without the wife knowing, or the wife is doing something without the man knowing. Now both of them is feeling some kind of way about the situation, and now with tension in the marriage, and then inevitably we see through the the data,
Mm-hmm.
it leads to separations and divorce.
Mm-hmm.
And so, if we can, have these discussions early and establish these positions early, in my opinion, I think that it'll relieve a lot of the tension financially that a lot of couples experience, because y'all on the same page, y'all are
Of
in
course.
alignment. You know what I'm saying? Y'all both know where y'all zero is at. It's at
Right.
1,000. It's at 2,000. It's at 5,000. You know what I'm
Mm-hmm.
saying? So, and even with the kids, how are they supposed to learn these values? Because again, we're not just raising this zero for the sake of just raising a zero. We doing something with this money. We invest in it. You know what I'm saying? So the next generation got to know how to keep the show going.
Mm-hmm.
So we got to teach. In my opinion, it has to be, again, wealth begins at home. So it has to be a one family thing. You know what I mean? Like where everybody's on the same page. We all know what it is, because again, we all going down the same path, trying to achieve the same common goal as a household, as opposed to just individually. Again, and everybody trying to go 5 different ways. Now everybody's stretched.
Mm-hmm. Yeah. So
Raise
yeah.
a zero.
Yeah, I agree 100%. I agree 100% that the person that you're married to or whatever the case may be, like y'all definitely have to be aligned as far as finances, how you save finances, spend finances. If you have joint accounts, of course, that got to be the
And you
language
will have a
between.
joint account.
That got to be the
You're
language
still an
between us.
adult. You know what I'm saying?
That got to be the language between us. Like our zero in this account would be $1,000. So
Mhm.
anything once it go below that, we don't got it. We got to get it back to that. And as it relates to everyone else, I was speaking more so than all the other hands that be trying to get in your pocket, and
Oh, if they're not in our household, yeah, it's none of their. It ain't none of their business what our
right.
zero
So
is. You
yeah,
know
that's
what I'm
what I'm saying. Like
saying?
keep your zero to
You know
you
what I
and
mean?
your household,
That
so to
includes your
speak.
parents, your
Yeah, your
brothers, your
parents.
sisters.
And I argue about the kids because all you could teach the kids, and then
Bring them along, of
as they get
course.
older, then you
Right,
could
you
you
bring
can
them
reveal
along,
you
of
can reveal
course,
things as they go older. Like when
of
they get
course,
to the age
because
of
the kids
when they can
they can be chatty patty,
they
you know
be
what I'm saying? So
chatty, and all
they'll say things
they
out
know
of
is what they
turn.
want.
Yeah,
All
right.
they know is what they want. So
So we got another video, man. Let's go ahead and bust that video down real quick.
Too often I'm hearing people complain about how hard it is to save money. And right on payday, they're out frivolously spending, loaning, giving away their hard-earned dollars, fast food trip after fast food trip. Look, your problem isn't saving money, okay? Your problem is raising your zero. You haven't risen your zero. I can tell. Look, raising your zero is raising the amount that you actually consider yourself broke. So, if your zero is at $100 and that's all you have to your name, and the little ones come ask to go on a little McDonald's trip, because they love them Happy Meals, right? Guess what? You ain't got no McDonald's money because you broke. If your mom asks for just a couple of dollars because, she loves to hit the penny slots at the casino, I'm sorry, mama. Can't do it. I'm broke. Look, you may hurt some feelings, but you ain't gonna hurt your pockets though.
Yeah, I like that.
Hey, you may hurt some feelings, but you ain't gonna hurt your pockets. I like that.
So it's about
Put that on a t-shirt.
facts. So like, shouts out to my man. We gotta get a t-shirt made, but yeah, man, that's what it's. But again, going back to mindset, that's why I said it begins at mindset. That has to be your mindset, though. Like, I may hurt feelings, but I'm not gonna hurt my pockets, because again, when it's all said and done, and when life is happening, you and your pockets is gonna be glad that you raised your zero to whatever you have risen it to. Because again, the people who was asking you for all the McDonald's and the penny slot money and all the Gucci bags and the exclusive trips, they go appreciate it too when life happened, and you go be Superman and them saving the day. You feel me? So raise that zero. And personally, going back, I'm just a stickler on language. So instead of saying, I'm broke.
Yeah, that kind of that pierced me too.
Right. Instead of
Like,
saying I'm broke, how about we just say, it's not in the budget.
I don't got it.
Or I don't got it.
I don't got it to give.
That's what I'm saying. It's not in the budget. Like,
yeah.
But that's why it's important in having a budget, because that's what I was gonna say as well. I was looking at an article in one of like them CNBC Money, one of those type of articles. Excuse me. And then it was talking about it was doing a reviewing the budget of a couple who combined made, I think, about like over $250,000. But it was just showing how the money comes into one account. Both but I think the woman earned more than the man, but all the money still came into one account. Then from that one account, they paid all of their respective household bills, as well as personal retirements and student loan debts. And then whatever was left over, then they gave themselves an allowance. And then whatever was left over after the allowance went back into savings or retirement or investing, whatever they decided, or fun. No, I think that whatever was left after they put the allowance went into like a fun account, so they can afford going out to eat, or buying each other toys or exclusive gifts, doing stuff with the kids. And then boom, what I'm saying, they live their life. So to your point, like, yeah, just because you and your mate are going off or operating financially off of one pot, it don't mean that you not go have personal accounts. Right. Again, you still go have an allowance. But again, everything is coming through that one pot. So think of it kind of like a tree, for example, and that the trunk of that tree is that one account. But again, yeah, that one account is going to branch off into two different, things for your personal account, his personal account. And at some point, it's going to be the kids' accounts. You know what I'm saying? And if you so choose, anything else you want to have. But that your financial tree in that regards, you know what I'm saying? Ideally, yeah, you want that motherfucker to have a lot of branches on it. You feel me? You want it to be the biggest possible tree it can be to provide shade, for generations to come. You know what I'm saying?
You want a nice big old oak tree.
Big ass tree, you feel me? One of them sequoias, you feel me? Like, that's what you want. So financially, like, that's how you, but again, you're not gonna get there if you're not raising that zero.
I know a girl named Sequoia.
Sequoia is raising that zero, you feel me? Like,
Sequoia.
Financially, shouts out to Sequoia. But that's how you. But again, it's my goal. That's why I said it begins with mindset at the top of the topic section. So
yeah, good. I mean, that's good. I think this is some good information.
Yeah, raise that zero, baby.
To raise your zero, start thinking about it. You don't got to do it today or tomorrow, but put it in your mindset. Put it in your brain. Like, this is something that you want to achieve. And if you think about it long enough and contemplate it and see it be done, it'll be a thing of the past before you know it. Easy.
So regardless of how you feeling, So in closing, not in closing, we got one more video and then we'll close it out. So
all right, yeah, let's
get that last video and then we'll come back and then we'll close it out.
Check this out.
Changing my zero, right? All right, Jay, what do you mean by that? Most people's definition of broke is when they're broke. Meaning, most people say, when I don't have any money, now I'm broke. Or for some people, they say, when I don't have any money and I max out my credit cards, now I'm broke. But what if you said, when I've got $10,000, I'm broke? That means when you got $10,050, you only got $50. So you can only spend $50. That means when you got $15,000, you've only got $5. The problem is, most of us let institutions tell us. Most of us let credit card companies tell us when you can't spend anymore, when you're no longer allowed to. What if you just simply change your definition of zero? See, for me, my first definition of zero was $1,000. Then I changed it to 10. Then it went to 50. Then it went to 100,000. What if your new definition of zero was when you had $1 million? What if it was when you had $10 million? Do you see how that little discipline, it can just start? See, at the beginning, what you're looking for is discipline, not money. Why? Because the disciplines allow, so when you start making more money, the discipline of it will make you start keeping it. Simple way for you to start making more money now is just simply change your zero. Your definition of broke now is what?
And you know what? I just thought about something listening to this guy. It gives you a goal when you like want to raise your zero. Like say if you start at 100 and then it's like now I want my zero to be 500. Like it gives you something to now you're not just saving money and sitting on it. Like you said, it's a game. It's like okay, all right.
It's that anticipation
Yeah,
dopamine.
I gotta get to 500. Then when you at 500, you're like, all right, I'm at zero. I'm here.
Yeah.
And so now from here forward, you might take a little couple of weeks to spending the excess of the 500 at that point. Go treat yourself to a meal. Go buy your pair of shoes or something. Go, take your lady out or something. You might do something. But you at 500, you achieve that goal. And then, so that's what I just thought. I said, I think I'm going to raise my zero. Just in this moment, I just said, I was like, you know what?
I'm raising mine. No, I've been in the process mentally of raising mine because, like I said, it's at 1,000. Now it's like, oh, I got to get to 2,000.
Yeah. I think I got to raise mine to 2,000.
I some kind of way, I told myself initially 1,500, but I was like, nah, like I'm not challenging myself enough.
Yeah.
But that's the game part of it that you play with yourself and the anticipation and the dopamine hits. But again, seeing it and then, so to your point, we wonder how, quote unquote, the rich stay rich and why the poor stay poor. This is specifically why. No discipline, like he said, because the more money you make, if you don't have that discipline, then again, you just spending. So that's why when we see people win the lottery, they in bankruptcy in a couple of years. Or when we see these athletes, these entertainers, they make all these millions of dollars, and then after their career, the check stop coming in. Now they in bankruptcy court. Right. Even just the average American, the average individual on planet Earth, they live in a check to check lifestyle because they just not raising a zero.
Facts.
That's the only reason why they're doing that. Because as he said, you waiting on the banks and the credit card entities to tell you when you can't spend, as opposed to you telling yourself what you can spend and what you can't spend.
Facts.
Having that financial discipline, as you said. So moving forward, now we know why the rich stay rich and the poor stay poor, or why people become millionaires and billionaires and not, because they're not raising a zero.
Yeah,
they're not raising a zero because again, we're not just raising that zero just to have the money to sit there. Because again, that zero money is it is there, but you putting it to work. You know what I'm saying? High interest savings accounts, you put it in stock, money market accounts. It doesn't matter. But at the end of the day, mentally, it's like I said, it's a mindset. It's a mind game. You disciplining yourself. You telling yourself what you can and you can't spend. Regardless if you're talking to yourself, your loved ones, or anyone else. You know what I'm saying? Like, no, because my zero is at 5,000. It don't matter if you saw that I got $3,000 in my bank account. As far as if my zero is 5,000 and I got $3,000 in my account, it's like I'm in the red to the bank $2,000.
I'm in a hole,
and that's a problem.
Yeah, I'm in a hole.
I gotta fix this problem. You looking at it as like you got $3,000, but I'm looking at I'm 2,000 in the hole.
Yep, that's exactly
mindset, perspective. Map GPS. You feel me?
Right. I think I looked at my checking account today, and it was like $900 something. I was like, oh no, like, I'm at a deficit. I'm at,
and it's crazy because, and it's like but it's like a gift and a curse in that, when you have this level of financial discipline, you can see, the error in other people's ways, but just how people are just living in their own reality.
Right.
Because again, it's like, just like I said, like, yeah, I can have $990 in my bank account, but if you like, let's go out to eat tonight. No, I ain't got it.
Not tonight.
It's just not in my budget. Like, nah, I can't go. Like, oh, you broke. Like, yeah, I'm broke. And then, like I said, my thing now is whatever they say is like, yeah, I'm that. Oh, you broke? Like, yeah, I'm broke. Like,
I'll be broke. I guess I'm broke.
yeah, I'm broke. You know what I'm saying? Like, oh, you cheap? Yeah, I'm cheap. You know what I'm saying? Oh, you not generous? Yeah, I'm not generous. Like, oh, you want to donate to this cause? Like, nah, like, I don't.
Yeah,
No, thank you.
so let's be mindful of our finances. We always try to bring, try to make us well-rounded people and individuals, and positive people in society. So we always got to have a money finance segment to what we present to y'all. So this is just another aspect of it, of raising your zero, so you can have for a rainy day. So, when life challenges are thrown at you, you're not overtaken by it. You can keep thriving and striving,
Hmm.
you know? Anything else?
Well, that does it for me. No closing remarks. I pretty much gave them, so I can go ahead to the next topic.
Raise that zero.
But yeah, raise that
Raise that
zero.
zero for
Remember,
sure.
mindset, baby.
And I want to hear the comments. I want to hear how many people have risen their zero.
What have you
Will
risen it to?
have you risen it to?
Yeah.
Where did you start at? Where you at now? And do you find this to be beneficial to you? So when y'all are rippling and the ripples are rippling, give us feedback on this raising of the zero, how it works for you. Interested to hear about that.